Hi everyone, I'm Ricardo Gonçalves. Welcome to the special SBS On the Money podcast, where we are bringing you the Reserve Bank interest rate decision live as it comes to us in about 3 minutes' time. The Reserve Bank is expected to cut interest rates by 25 basis points to 3.6%. Of course, it was expected to do it last month too. So with just 2 minutes to go, I do have a live guest with me standing by. It's My Bui from AMP. Me, thank you so much for joining us live here on the SBS On the Money podcast. Very quickly, as we approach the release, what do you think will happen? We thought there was going to be a rate cut last time. What about this time now?
We still expect a rate cut this time, everyone. So last time the RBA actually did tell us that rates would be cut, the direction for rates would be down. They just wanted to wait a little bit for a confirmation from the quarterly inflation reading for Australia to show that inflation was coming back to target sustainably. Arguably, in the past 5 weeks, we've had that confirmation from the second quarter inflation report. We've seen headline inflation coming in at just 2.1%. The trimmed mean inflation, which shows that the underlying pressures for inflation, was coming in pretty much as the RBA expected, at 2.67%. The annualized quarterly rate was actually up just 2.4%. So we do expect the RBA to be quite confident in welcoming that numbers and cut rates today.
Okay, so we've got a few seconds until it comes. What I'm going to do now, Me, is take you off camera just for 2 or 3 minutes so you can look at the statement, and I'll have you join us in a few moments. So thanks for that. Stick around. And what I'll do for you watching online is call up the RBA website so you can take a look at the statement as it comes to us too. So that'll be breaking in a few seconds' time. So we are expecting the Reserve Bank to cut interest rates by 25 basis points to 3.6%. Still waiting for that decision to come through. You're seeing on your screen what I'm seeing here on mine. So, of course, whether or not the banks pass it on in full, we'll have to wait too. So the decision should be coming out as I speak. Let's have a look at what the Reserve Bank has done. Here we go. The Reserve Bank has decided to cut interest rates by 25 basis points to 3.6%. You can see that right here in its statement. I'll give Me some time to look through this information, but let's take a look through some of the key points. The RBA is saying that inflation has fallen substantially since the peak, as we know, and that higher interest rates have been working to bring aggregate demand and potential supply closer towards the balance. What else is it saying here? It's saying updated staff forecasts for the August meeting suggest that underlying inflation will continue to moderate to around the midpoint of the 2 to 3% target, with the cash rate assumed to follow a gradual easing path. I think that's pretty important, this line right here, that underlying inflation will continue to moderate to the midpoint of 2 to 3%, with the cash rate assumed to follow a gradual easing path. Does that suggest further cash rate cuts to come? So we'll discuss that in a few moments. The RBA also talks about the outlook being uncertain. We'll go through that when we've got more time. This is just an immediate look in terms of what the RBA is saying. And we'll take a look also to see if there's, this is pretty important here, this last line here, the decision. Today's policy decision was unanimous. So all board members on the Monetary Policy Board are deciding to cut interest rates. So it was a unanimous decision. And usually this last paragraph here is pretty important too. Let's take just a very quick look at what it's saying, that this cut in the cash rate brings it to about 75 basis points worth of cuts since the first cut happened in February. Remember, rates were cut in February and in May. The board remains cautious about the outlook, particularly given the heightened level of uncertainty. And it noticed that monetary policy is well placed to respond decisively to international developments if they were to have material impacts for activity and inflation in Australia. The other key thing we do need to keep a look, or do need to look at today too, is that the RBA released its statement on monetary policy, which happens every 3 months, and it usually gives us an idea of where they see the economy and its forecasts for the economy. So if I just go down to that, and take, I might have to put my glasses on for this, sorry guys. So it is expecting the economy to grow at a slower pace now than it previously thought. So, for example, it's now expecting the June number next year to come in at 2%, whereas before it expected it to be at 2.2%. It is expecting the underlying rate of inflation, the trimmed mean. Remember, that's the rate that the RBA wants to keep a close eye on. It's expecting that trimmed mean to stay at 2.6%, which is what it expected last time, and now says that it is expected to fall to its midpoint of 2.5% by December 2027. Remember, the RBA wants to see inflation to fall or be at its midpoint on a sustainable basis. Does that constitute sustainable? We'll find out in a few moments. And just finally, the unemployment rate, no change there. It still expects it to be at 4.3%. So a lot of information there. I promised My Bui that I'd give her about 2 or 3 minutes to take a look at the data. I'm hoping she's ready now. My, I'll bring you back up. Thank you for sticking around. So the RBA expecting or did cut interest rates by 25 basis points to 3.6% as expected. You've had a very quick look at that statement, as I have. What were the reasons why it gave for that rate cut, and were there any surprises in there at all?
I would say pretty much no surprises from the RBA for the reasons that they cut rates this time. They did give three main reasons though. The first one is that inflation has continued to moderate. We've mentioned this just now. It was ticking down pretty much as the RBA as well as markets expected. The second reason for the rate cut was definitely from the second part of the dual mandate from the RBA, which is the labor market. The labor market has eased a little bit further in the meantime in the past 5 weeks, with unemployment rate ticking up to 4.3%. Notably, that's actually the peak of unemployment rate that the RBA is forecasting for this cycle. So that is a proof that the labor market is easing quite a little bit, and they probably need a bit of support from a rate cut from the RBA. The third reason for the RBA rate cut is definitely on the economic growth side. So there are a lot of uncertainties from the global market, which the RBA has spent quite a bit of time digging on, with all of these tariffs new and the global trade growth slowing down globally. So that probably requires the RBA to give a little bit of a boost to the Australian economy as well. And as you mentioned, they did forecast lower economic growth for Australia this year.
Okay, so the statement on monetary policy is a lot more detailed. We need a lot more time to go through that. But again, going through its forecasts, are there any major changes there?
So I would say three things that you should look out in the statement for monetary policy. So exactly those three reasons that they cut rates. So the first two are definitely inflation numbers and unemployment rate numbers. Actually, no changes there. They still expect to see trimmed mean inflation slowing down to about 2.6% over the forecasting periods, and unemployment rate picking at 4.3%, no change there. I think the GDP number is actually quite remarkable though. So now they have revised down GDP growth to just 1.7% year over year for the June quarter, and 2% by the end of this year. Before it was slightly higher than that. And this is despite them seeing a little bit of a pickup in household consumption growth throughout this year. So why is the reason that they revised down economic growth is because they see lower business investment that is actually extremely weak in Australia right now. It starts with a zero. In normal times, we should be seeing business investment growth at 2.5% historically. And with all the uncertainties from businesses, from all these global trade developments, maybe a lot of businesses are hesitant to actually put more money into investments as well. So I think that's one of the reasons why they seem to be a bit more worried about the economic outlook for the Australian economy this time around.
And one final question. I know you're very busy and you've got a lot of other things to do. So the final question is about where to from here. Will there be further interest rate cuts? And again, this is just a very quick look at the statement that came out. I found it interesting where it
I
did
think
say that the updated staff forecast for the August meeting suggests that underlying inflation will continue to moderate to the midpoint, with the cash rate assumed to follow a gradual easing path. Does that support further rate cuts?
that definitely supports further rate cut. The market sees about two more rate cuts from here. That's actually what's in the assumptions for the RBA. So even with this rate cut trajectory, the RBA still sees unemployment rate peaking slightly higher than now on an average on the trend level, as well as inflation sustainably in the midpoint of the target. So to me, that's definitely an argument for more rate cuts to come. I think there's a bit of a caveat to that though, because the RBA actually spent quite a bit of real estate on their 70-page statement today, talking about lower productivity growth in Australia. They seem to be quite concerned about that part. Why is this important with lower productivity growth and with nominal wages growth above 3% right now? That just means that the RBA is quite worried about a pickup in labor costs in the economy. That means they won't be in a rush to cut rates every single meeting from now on. They probably will do that very, very gradually, given that they're so worried about lower productivity growth and higher wages growth for the labor market from here.
May really appreciate your instant analysis. Very valuable. That's My Bui, their economist at AMP. Thank you so much for your time, May. Okay, so there's some instant analysis from My Bui from AMP. Let's find out now what the markets are doing and how the markets have reacted. For that, I'm joined by Stephanie Youssef. She is a finance reporter and producer here at SBS. She actually assists me quite a fair bit. Stephanie, how are the markets looking?
Well, Ricardo, the share markets are certainly reacting to this news. The ASX 200 is up 0.23% at the moment, which is higher than 9 minutes ago. In terms of the sectors, 7 of the 11 sectors are in the black today, led by consumer staples. The worst performing sector is industrials. Now, looking at the Australian dollar, it's currently trading at 65.05 US cents, which is, as expected, much lower than 9 minutes ago.
Okay. Stephanie, thank you. Thank you so much for that update, Stephanie. That's Stephanie Youssef. They're a finance journalist and producer here at SBS. Thanks, Stephanie. Okay, so we've checked in on the markets. We've checked in on some instant analysis from economists, My Bui there from AMP2. So what does this mean for you, especially if you have a mortgage? Well, it does mean when the banks pass on this interest rate, the interest rate cut, that it should mean mortgage repayments are lowered. We'll wait to see if any of the banks have confirmed that they'll pass on the rate cut. I'm just checking my emails right now to see if any of the big banks have confirmed it right now. I'm not seeing it at the moment. We'll check in at the end of this broadcast to see if anyone's done it. But in the meantime, I spoke earlier in the day, assuming there would be a rate cut, with Sally Tindall from Canstar to find out what it means for mortgage holders.
So for someone with a $500,000 mortgage at the start of the cuts, today's 0.25 percentage point cut will translate into a drop in monthly repayments of around $74. But when you look across what is now 3 cash rate cuts, you're looking at a drop in minimum monthly repayments of over $200 for these borrowers.
What does it mean for those looking to get a loan in terms of borrowing capacity?
And so this cash rate cut will mean that someone's maximum borrowing capacity, that's the maximum amount they can borrow from the bank, will most probably increase. For someone on the average wage, you're looking at about an increase to their maximum borrowing capacity of $12,000. But across what is now 3 cash rate cuts, you're looking at a boost of around $35,000. In the scheme of things, this is probably still small change when you're looking at buying a property in, say, Sydney or Melbourne, but it will put yet another spring in the step of a lot of would-be buyers who were sitting on the sidelines for many months when interest rates were on their way up. Now they're on the way down. I think that more people will be coming back into the property market.
So taking this rate cut into consideration, once it's passed through by the banks, how do you know if you're going to be on a good interest rate for your mortgage, and what should that good rate look like?
For starters, the average owner-occupier paying down their debt will be on a rate of 5.54%, but that's an average. You want to be aiming for below average. So know that there are going to be an estimated 70 lenders on our database offering rates under 5.5%. But if you want to set yourself a stretch target, and you should, 5.25%. We expect over 30 different lenders will be offering a rate under this mark for owner occupiers once this cash rate cut filters through.
Okay, not every borrower, though, will see this rate applied to their repayment straight away, right? Some actually have to contact their bank.
No, they won't. And so when the bank passes on a rate cut, they do so within about 10 to 14 days, particularly in the case of the big banks, and your interest rate will drop automatically. However, your minimum monthly repayments might not, because CBA, ANZ, NAB, for starters, they don't move your minimum monthly repayments. Even if you've got a direct debit set up saying that you want to pay the minimum, you actually have to reach out to your bank, contact them and tell them to drop your minimum. Westpac, on the other hand, they do automatically drop someone's minimum monthly repayments, provided you've got a direct debit set up, as do other banks. So it's really important. Pick up the phone to your bank, understand exactly how they will treat your minimum monthly repayments, find out if they're going down. And if they're not, have a think about whether you want to keep your repayments high and get ahead on your mortgage, or whether you need that money into your budget to pay other bills.
That's Sally Tindall there from Canstar. So that wraps up this podcast. The Reserve Bank, as expected, cutting official interest rates by 25 basis points to 3.6%. It now means it's cut interest rates 3 times so far this year. We'll have more details on SBS World News coming up tonight at 6:30. Don't forget also to check out the SBS On the Money podcast. We'll go into more detail on that too with my special guests, Gareth Spence from NAB, along with Mike Jenica from UBS, to talk about the market implications. And just finally, I'll do one quick check to see if any of the big banks have passed on that RBA interest rate cut in the last 15 minutes. They haven't at the moment. We'll keep you updated on that too on SBS World News. Thanks for joining us.